vis-a-vis that channel that we talked about, to an economy that is consumption oriented and really focused on household income. And you really can't do that unless you take a lot of money from the state-owned enterprises and the Communist Party and give it to the Chinese households. That's never going to happen. Certainly, probably not in my lifetime. And so, with their result, with the policy that they're left with pursuing is inflating the PBOC's balance sheet, lowering, sort of inflating medium-term lending, open market operations, cutting interest rates, lowering reserve requirement ratios, cutting the loan prime rate, increasing pledge supplemental lending, all the kind of things that create headlines on Bloomberg, headlines on the Wall Street Journal, and get investors like myself excited about China's impact on global liquidity. But that, in our opinion, is not a long-term solution, but it is a phenomenally positive solution for investors who have broad go anywhere mandates like we do here at 42 Macro.
For those of you that are joining us, if you got questions, I mean, what an incredible opportunity here to have Darius with us. So if you got questions, just put them in the comment section. We'll get to those. So I guess with that being said, Darius, then do you see Evergrande having a big impact on the rest of the real estate market across the globe, or no?
Yes, it's currently having a big impact in terms of the response, the firemen getting in the truck and putting out the fire. In terms of they're trying to stave off broader contagion in the Chinese market. So that impact has been positive at the margins really for quite a while now. The Chinese, the Communist Party last year, once Xi got reconfirmed to become emperor of the Chinese economy, they basically handed the baton to the PBOC and really has really left it with the PBOC because they've been very unwilling to pursue dominant fiscal policy, fiscal dominance in terms of creating countercyclical demand in the economy. I don't know that that's going to. By the way, none of this stuff is going to work. China's in a structural liquidity trap. They have way too much private sector debt. If you look at their private sector debt burden relative to any other major economy, it's terrifying. And you look at their debt service ratio, terrifying. It looks very similar to what we saw in Japan in the late 80s. So it's unlikely they're going to get themselves out of this by pursuing countercyclical policy. But what they are doing, and that's been very positive from the perspective of investors and this whole Evergrande phenomenon, is creating liquidity. And that liquidity that they continue to create continues to find its way from a fungibility standpoint into global liquidity. And that's been obviously positive for assets like Bitcoin. It's been positive for all assets, but obviously most notably Bitcoin this morning.